Welcome back in. If you're just tuning in, I'm sure you recognize our friend Phil Bloyd. He's with Revolutionary Financial Group. This is Lowcountry Money Talk. We've had a big year to talk about, boy, and we somehow managed to recap it in just a few minutes. And lots happening, but thanks to your expertise, you kind of boiled it down for us. And boy, a lot to talk about too, and what's coming, what's sort of happening, and then what to expect for 2022. So thanks for being here.
I'm glad to be here. We got to get it going. It's going to be a very interesting year. And sometimes you don't want your investment person to say it's going to be interesting.
I'm not sure. Yeah, it depends. Do we want interesting or not? But one of the things we're going to spend some time on in this segment, because it's important, if people are investing their personal money in really trying to, do the right thing for their stocks, and stock pickers are struggling right now to beat the market. So what say you?
Yeah, so I always talk about this. Fund managers, normally have a very difficult time. So if I have a growth fund, usually they don't beat just the Standard & Poor's 500 index. So if we look at the numbers for last year, so I keep saying last year because I think it's important to see what happened last year so we can plan properly for this year.
Yes.
If that makes sense.
Well, it does, because you got to take a look at history, see what went well, see where maybe we made some missteps so that we can, plan for the future.
Let me ask you a question, Jessa. If you were down here at Hilton Head International Airport and you were going to get on a jet and it was going to Charlotte, North Carolina, and you went in and spoke to the pilot and said, hey, what's our chances of making Charlotte? And the pilot said, well, we've got about a 15% chance of making it. How are you going to feel about that?
Pretty uncertain and not really excited about getting on that flight, quite frankly.
I'm leaving.
Right.
Open the door. So if we look at how our fund managers did, okay, so 85% of the managed funds on Wall Street could not beat the Standard & Poor's index unmanaged.
That is an astonishing percentage.
So they only had a 15% that did better. So that's that, you want to get on that plane.
That's where I'm asking for a refund. I don't think that's possible in either industry. But
well, though, even to add insult to that, you're paying for professional management. So these funds, they may be charging you internally 1%, 1.5%, all that. Where if I bought into that index and avoided that fund fee, I can get that index very cheaply, much less than that. So, and at least I'm going to do the average. So when you're paying for management of assets, the idea is to outperform
beat the market. Absolutely. And are people aware of that's happening? Do they check in and say, hey, where did we perform?
Well, Jessa, the market's done so great over the last several years that when I talk to people, I may be out in an event or something, I'm like, how's your money doing, Jessa? And you're like, oh, it's doing great. And I'm like, well, it should be. Because we've been in the longest bull run, one of the longest bull runs in history. So if you aren't doing great on your growth assets during this market, you really got a problem.
Right.
But where they're missing out is they're not doing that comparison. So by the time you told me, hey, I'm doing great and all this, so I'm going to water it down a bit and say, compared to what?
Compared to what? That's an interesting point, because doing well isn't necessarily an indicator right now that your portfolio manager is really doing their job.
So a lot of times people will just tell me, Jessa, they're like, well, I'm up, I'm way up. And I'm like, okay, what's way up? And they're like, well, I'm up 20% this year. And I'm like, okay, the index is 27. And they're like, oh. So I'm like, you're below average.
Right.
So once we start comparing that, and then we start looking at the fees, like I mentioned, the fund managers and all that stuff, and we start comparing the fees and the expenses and all this, and I'm like, wow, this is what you're paying, and this is what you're getting in return. So if I'm below market or just average, I'm like, wow, I could be paying quite a bit just to get average.
And the opportunity cost of where you could have been, on the upside of that 27% if you had the right manager. So that's a very good point to make, and you're right. There's so many people who are so happy with where they landed at the end of the year, and yet 85% of them really could have done at least average or better.
Right.
So interesting point. Well, wow, that flew by. Fun topic. We got more. We're going to talk some more money. It's Lowcountry Money Talk. Stick with us.
All right.